But all right, let's get started. We're looking at having a smooth transition for the next fiscal year. So today we're going to go through some slides, pop into Intact a little bit to go through a few points I want to see. A few weeks ago I went through like looking up your encumbrances and that kind of stuff, so I won't spend a lot of time on that. So today we'll go talk about Workforce Go and what's happening with the end of the tribe's fiscal year payroll. We'll discuss briefly changes you'll have in Martis because of the fiscal year, and then we'll touch points on Intact about inventory, encumbrances, and accruing our expense activity. So if you have questions, feel free to unmute yourself. Otherwise, please stay muted until you have a question, or you can use the chat box. For the end of the fiscal year, we're currently in one pay period that's going to get paid in October of the tribe's fiscal year. That pay period is 100% inside of the month of September, so September 12th to September 25th, with the pay date on October 2nd. Payroll is going to process that as they normally would, and the pay date of October 2nd, that is when payroll is going to post all of that activity as they normally do. The change that happens at the end of the year is all of the September earnings are accrued back into the fiscal year of 24. In this case, it's 100% of the pay period. So 100% of the payroll is going to be accrued and expensed to 9/30 through accruing journal entries that we do manually here in the accounting office. And does someone have a question? All right. And on our expense reports, what we can expect to see in September is that October 2nd pay date will show on 9/30. And on our balance sheet, there's an account number, 20,000. It's called accrued payroll. That amount of payroll that's going to be charged to your funding sources will be shown there as unpaid because it's not being paid to employees until October, until fiscal year 25. The next pay period that begins a little bit more different. It encompasses two different pay periods. It starts September 26th and ends October 9th. So in other words, for the tribe's fiscal year, 26, 27, 28, 29, and 30 are taking place in fiscal year 24, with fiscal year 25, October 1st to October 9th. Time is going to be split between those two pay periods based on its percentage of days, basically what happens, what's available to us in Workforce Go or through Workforce Go. Sorry, I'm getting a message that someone's trying to join. It's not letting me view their request.
LJ, can you hear me now?
I can hear you, Paulette. Okay.
I'll put it on mute though again.
Thank you. So Workforce Go, the option available is to accrue based on percentage of days. And so what we'll see is that because there's 5 days in fiscal year 24, basically it's going to be a 5 divided by 14 or approximately 35.7% of our total payroll is going to go to fiscal year 24. And 9 divided by 14, 9 of those 14 days, roughly 64.3%, will be expensed to fiscal year 25. Those are entered kind of in two different ways. Workforce Go will post those entries and split that time accordingly. And then manually, we will accrue that time to September 30th also, just like the current pay period we're in. And any of that unpaid payroll will show an account number 20,000 as accrued payroll because employees aren't getting paid. I think this pay date is October 16th. So because that's when that's happening, we're accruing payroll, and that's how it'll display on our financial report. So on 9/30, this pay period, September 26th to September 30th, will get accrued to September 30th, even though it's getting paid October 16th. With that split happening, just as it's bulleted there. 5 divided by 14 for fiscal year 24, 9 divided by 14 for fiscal year 25. So as we have our end of the year looming upon us, make sure we're notifying monitors if there's funding sources and cost centers, as they're called in Workforce Go, are being updated so we can get ready for the new fiscal year. I don't think that requires a PA anymore. That I believe that is just an email if a monitor can confirm that, if any one of them are here. Michelle, you can just get an email to change funding sources if needed, right? Not a whole PA. Make sure we monitor timesheets to ensure that the proper funding codes are assigned. Just takes a couple of minutes to scroll through our timesheets to take a look, depending on the size of your staff. Head Start has quite a lot of employees, but they have a lot of supervisors who could be looking through timesheets. Here, it's one person for 26 or 27 of us. So not as time consuming as it would be at a place like Head Start. Keep in mind that when employees cost center, so if the program monitor updates your employees' funding sources inside Workforce Go, that doesn't automatically change all of the already entered entries. So if we're changing funding sources from FY24 to a new one called FY25, when that change is made, it's the activity that starts to happen after that, not all the stuff before. So if we make that change request for the funding sources, you have a second responsibility to look at your timesheets to make sure they're correct, and also to make sure that those changes are being made, because you'll have to do that to any prior entries. So if you have staff who have funding sources that are changing, and
Also for the tribes, this is just for the tribes fiscal year?
Yes.
Are people that are funded under the tribe?
Both of those, yes.
Okay.
But when we make those changes, and that would even include your fiscal year operating period, Paula. So when you make a change to staff's timesheets or to their funding sources that are assigned, Head Start would have the responsibility to make sure all of the employee timesheets are now updated to correctly display the new funding source. The change doesn't happen to all the stuff that's posted. So if we've already punched in, we've already accrued time on our timesheet for a couple of days, and then the funding source is changed, none of those previous entries will change because the employee's profile was changed. You would still have to make that correction. And that goes for if I submitted a time off request today to take time off in October. That's likely to be approved now, but in October, if my funding source changes from a fiscal year 24 fund to a fiscal year 25, that time off request doesn't change because it was submitted while I was assigned to fiscal year 24. So people responsible for timesheets will have to make sure to keep an eye on that as those things change to ensure that the leave is going to be charged to the correct funding source. And that's because that action took place before the change of funding sources in Workforce Go. All right, so that's how Workforce Go is going to post for payroll. All of our September earnings will be accrued back to September 30th, even though the pay dates are October 2nd and October 16th. In Martis, there's going to be a slight change as we have every year. Once fiscal year 25 begins, the system administrator, Daryl, will make a change in Martis to say that the default period is fiscal year 25. So when we log into Martis, that's the period we'll start to experience once October hits. So make sure to take that into consideration when doing a change request. Some of us may still have change requests to be made in fiscal year 24, so you'd have to make that change in Martis before you can go forward. Switch to 24 and then hit filter before moving. And so I have a little template here. In the chat box, a link to this presentation is there. So if you want to save that or print that, access that later, the link's in the chat box. So if we use general, indirect, or casino revenue-based funds, any new change request starting in October should be using fiscal year 25. once budgets, of course, are approved. And if we're making changes to pay bills because it's now in October or November, and we're paying our bills that we're getting for fiscal year 24, we need to make a change to our budgets. Just make sure to change that to fiscal year 24 to make your budget change request to accommodate making those payments for fiscal year 24. Revenue funds will experience the same thing. If we're budgeting new revenue, we will budget those in fiscal year 25. If we're making changes to fiscal year 24 for revenue that was earned then, or to make payments for fiscal year 24 bills, then make sure to switch to fiscal year 24 to make those changes until carryover is complete. Carryover for most of those revenue funds won't be done until November 15th. And I know that Lynette had sent an email to everyone. Okay. So Lynette had this email sent out on Monday, I think it was, that we have until November 15th to close our purchase orders, to make payments, pay out our contracts, any of those types of things, complete our travel, all of that. We have until November 15th to do for fiscal year 24. And depending on the amount of the old bills after that, if we're not able to make our payments to complete those by then we may have to present those to Budget and Finance to get authorization to use either our revenue funds or another source of funds to make those payments inside of fiscal year 25. So we got roughly 45 days to close out fiscal year 24. For those of you who experience carryover, for your budgets, your general funds, casino, indirect funds, your specific funds don't have carryover. So if we're operating using general funds, any of your unspent funds aren't going to carry over into your new budget in fiscal year 25. Only one right now who's experiencing revenue funds is revenue funds that has carryover. And again, that's not until November 15th. And at that point, we can use the available cash, run a formula about what our payables are, receivables are, to determine what the carryover is that's available to move into fiscal year 25 that you can then use to budget in fiscal year 25. So the program monitors are responsible for this. Usually a couple times a year, somebody's going to submit a change request trying to manually force a carryover. That doesn't do that. So if you're finished with fiscal year 24, there's no more activity going to happen with your revenue funds. You've closed all your purchase orders. There's no encumbrances, no outstanding bills. Reach out to the program monitor that's assigned, and they can help with doing the carryover to get that ready for you. They use the trial balance report in Intact, and they'll use that October 1st through 9/30th to determine spendable funds. And carryover cannot be calculated until that activity is resolved. So basically, the monitors do a journal entry, and it'll look something like this. They'll use the trial balance to get your cash on 9/30. They'll look at any outstanding accounts payable, which could be our accrued payroll. Any bills that we paid October and November would show as accounts payable on 9/30. If we have any travel advances due to tribal programs, that kind of stuff, or funds are even due to your fund, they'll run a calculation similar to what we're showing on screen. And on the right side, they do a journal entry on October 1st, debiting our fund balance carryover account, increasing your revenue in the fund balance carryover revenue account. And when that's done, like what we have on screen is a carryover adjustment of about $206,000. That's what would be available for you to spend, and then to budget for fiscal year 25. So that'll either happen after the books are closing in November 15th, or when you know that there's no more activity going to happen on your funds. Reach out to the monitor, and they can do that to move you into carryover a lot sooner than the November 15th date. And part of that is we don't want to start the carryover too soon. It's been in the past, programs have pushed for that, and it gets done sooner. And then we have bills that we still have to pay, and that gets done after the fact. That can cause a problem with your funding because we have to adjust the carryover to reduce it. And if you've budgeted it and tried to spend it, and now we have to adjust that down, could put you in a little bit of a pickle with your funds, because now you'd have less carryover if we're trying to pay old bills after the carryover is done. And just a note on the budgeting process, the generally accepted in accounting principles for governments like ours, the authority body, it's called GASB, they have created a new budgeting requirement that starts in fiscal year 26. And so likely in this upcoming fiscal year 25, we're going to see some changes to the process of doing budget mods and how we budget. Right now, we're budgeting in the fiscal year that the funds arrive. So if we get a 3-year contract in fiscal year 24, so 24, 25, and 26, when we go into Mardis for the next 3 years, we constantly switch back to 24 to make a change to that existing budget. So this year, a little bit later down the line, we'll probably see it to where all of our change requests will only happen inside of one fiscal year. And that unspent budgets will start having to be added to each fiscal year. So it's going to be a little bit more work for especially the program monitors, but it's a requirement that we're looking at. And I now have this presentation is linked in the chat. I'll make sure I'll send out a copy of the new requirement for us that's coming up, so you guys can see that too. But that's budgeting. So let's get into Intact. I think I saw that. Okay, so we have Loretta here. So the first thing we're talking about is Loretta stuff for inventory. So Tribal Manual says each year we're supposed to do an inventory. Items $5,000 or greater for capitalized equipment. And I don't know if Loretta asks you for that or she goes to your office for that, but that's going to have to be done. If you have any capital equipment like trucks, large equipment, machines, that kind of stuff, things that individually cost $5,000 or more that are no longer in the control of your program, you've transferred it to another program, that kind of thing, make sure that Loretta is notified so she can update our records to match what has occurred. For non-capital equipment, items from like $500 to just below $5,000, we should have an inventory of those things: furniture, computers, electronics, including their name, serial number, model number, value of purchase, all that good stuff. And that would be Loretta that would work with you at that. So if you have questions, make sure you reach out to Loretta about those things. Paula is asking in the chat, and maybe Loretta can answer in the chat, would it be easier if we all use the same type of file for the inventory? Yes, and it should be Excel, right? If Loretta is getting a bunch of Excel copies, it makes it easier to consolidate all of this activity. If she's getting photocopies of someone's word sheet, you typed it so she could retype it is what's happening. So I'm sure Loretta would prefer a format like Excel. But Loretta, you can clarify that in the chat. Loretta says, yes, Excel will be good. All right, as the year is coming to end and over the next 45 days, we're going to have different types of transactions that are going to be in limbo. Things waiting for us to convert to be paid, or things waiting for us to convert to close. Standard purchase requisitions, contract service requisitions. We're looking for basically two types of states out there in the purchasing list views: pending or in progress. If we have a purchase requisition that says it's pending, it's waiting for the program user to take action. It needs to become a purchase order or a contract services purchase order. So we haven't moved it beyond the initial approval of that document. That's important because that's an encumbrance on our funds that will not remove until the program user takes one of those actions to convert it into a purchase order to get paid or to convert it to a purchase order to be closed. If it says in progress, that means we've started the conversion to a purchase order or a contract services purchase order, but we've left it in draft mode. So we have to do something with that PO. We can edit that and post it instead of leaving it as a draft. So then now we can either pay it or close it. In Intact, if we go to purchasing, you can go to purchase orders or contract service purchase orders to look for documents that are pending or in progress. Or you can go under other transaction activity to this area that says view transactions. And under that area, Daryl has created a view that's called Open POs and CSPOs FY24. So you can come here and all the stuff waiting for us to take action on purchase orders is sitting out here that we can do in a single view. So like right now, my view is for the whole tribe. Yours, of course, would be limited to what your permissions allow. We currently have 1,600 POs and contract service POs waiting for us to do something with. All the items for purchase orders are purchase orders waiting for us to convert to get paid or convert to close. Items that say partially converted. So we'll look at this serve all. So we did a quantity of 6 and we converted 5. So we've left one of those still waiting to be converted to get paid. Purchase order was from October to March. So it might be open 5 months longer than we intended. And this is not going to close until we fully exhausted this quantity column. So for the program, what we're looking at here is they have an encumbrance that's been sitting here putting a hold on their budget, limiting the amount of funds they can spend until they close. So these are the types of things we should be looking for now before the year closes so we can free up our funds in case there's something else that we need to purchase for the program. But that's what we'll see if it says partially converted for a PO or a contract services PO. It's been used but not fully exhausted. When they're fully exhausted, it's just going to say converted. And again, I'm here at purchasing, other transaction activity, view transactions. And this view is called Open POs and CSPOs-FY24. And then we have the same issue that we'll have to look for vouchers or justifications. This view right here is limited to just POs and contract service POs. So we could go directly into our voucher workflow, or to the justification workflow to bring up a list of all of our payments. But what you would be looking for are declined vouchers or vouchers that say draft. Declines, of course, a program monitor or Lynette has declined it for whatever reason. Within the document, there may be a comment telling you why it was declined. But because it's in a declined status, there isn't anything that Intact will do with that encumbrance until either we make a correction and resubmit that voucher, or until we close the voucher or delete the voucher and then close the purchase order. But it's waiting for us to do something. So typically, most of us, if we're using the default views, our little corner here is going to say all, and we're going to see something like this. And if I go to state and type the first few letters of declined and hit enter, we have 146 declined vouchers currently sitting out there. Some of these are recent, a couple of them are yesterday, so that's still in the process. But if we see here, this one's over a month old. These are dating back to last month. And this is in reverse order. So as I scroll down, the declines will get older. And that means any of these things right here have an encumbrance that's not released. So I would encourage anyone to go to the voucher list view, justification list view, look for all the stuff that might say declined for you, and take steps to address those. Either make the necessary correction that's been noted inside of that, or if we're not going to make that payment, we've paid it a different way, you've confirmed you don't have to make this payment, that document would have to be checked and then deleted, just that document only. What that will do is put the purchase order or contract services purchase order back into a pending or partially converted state, and then you can convert that to close it. If there's comments left to why this was declined, you can get there either from this screen by clicking on declined and then clicking on approval history. So this was declined because the receipt wasn't included with the request. And that happened today, so it's pretty recent decline. So if you have your user options on to receive an email, you'd see that comment from Lynette, or that's how you find it inside of Intact if you're wondering why the document was declined. I'm sure, Lynette, with all your declines, do you leave a comment for that? Or program monitors, and hopefully we do. But make sure we address these as we're working towards closing our year. Well, Lynette says she always does. All right. Our paid travel advances, if we're going to travel and maybe it's the end of September and now it's October, we got to reconcile. Let's make sure we get those things reconciled. Submit our travel receipts, our supporting documentation for the travel advance. Any travel advance that's over 5 working days pending, the travel monitors may initiate a payroll deduction if that's not reconciled in a timely manner, especially as the year is closing. If you're traveling at the end of this month or staff from your program are traveling at the end of the month and we can't reconcile until October, please make sure when you reconcile, you use 9/30 as the date to reconcile to, so that our encumbrance and the cost of travel will post to the proper fiscal year if our travel occurred in fiscal year 24. All right, so back to the PowerPoint slide. When it comes to encumbrances in our documents, knowing what those purchasing states means are just so important to knowing whether or not we've done all the stuff we can do to make sure that our financial reports are clear and accurate and reliable. So I have a link in the document that you can click on. It takes you to the page that tells you what each of those things mean. What does converted mean? Partially converted, draft, pending. Don't wait on somebody else. You can do that yourself. Inside of Intact, we pop back to Intact. In the top corner of Intact, there's a help and support button. And you have an option. If you hit help on this page, and that's what's going to help and support, help on the page. So hopefully we're using that. I use that every day. So I get asked different questions by, about any program or just people here. If I don't know the answer, I have to go look it up and read it, and then I can explain whatever the answer is, why Intact works this way, or how to accomplish something inside of Intact. And if you see, right below that, there's Sage University. With your user ID, you could click here, sign up for it. Intact has a whole bunch of free webinars about how to use Intact. So if there's more learning you want to do or more things you want to learn about Intact, sign up for Sage University. There's a lot of free training there, and some of those do require payment, but I would say there's probably about a solid 30 hours of free training that you can do. And they'll even print you a cool little certificate if you do that. If you're looking for your encumbrances, these are the different types of reports available to you to do that. First one is your fiscal or life-to-date reports. You can find those in the report center, and they include our encumbrances. And those, of course, give us a summary of our encumbrances. It's not going to give us any detail. It's not going to tell us which vendors it is. It's just going to tell us what the balance of encumbrances are by each expense account. A report you can use from the report center is fiscal year encumbrances by vendor. So if we need to see who we're looking for, what our encumbrances make up, we can do this and it's going to give us the vendors. Might be easier then to go to our purchasing list view screens, to go to purchase orders, or to go look for whatever documents. And now we can just start searching by the vendor instead of typing declined as a state or whatever it would be. The next two reports are probably the two types of reports I get most calls about. It could be the most difficult to run if we're not doing this regularly, which is the general ledger report. That's the detail. That's the official transactional record of every financial activity the tribe does, right? So it doesn't give us summary. It gives us every single transaction. And we can choose whether or not we want to see encumbrances or whether or not we want to see encumbrances and expenses together. My recommendation is to do one or the other, because otherwise, if you're a busy program with lots of activity, that thing's going to be a pretty big report. But you choose the filters and the information that comes back. Those first two reports are predetermined. You can put in the date, your funding source, checkbook program, that stuff. But here, we can actually put in a range of time. We can actually choose a specific vendor, that kind of deal. Same thing with dimension balances. It's a summary report that gives us a link to get to the general ledger. But we can then summarize stuff very similar to the encumbrance by vendor report. We can do that with our dimension balances. That was covered in the last webinar I did. So you can find that recording for it on my YouTube page if you want to see that. And the other report is purchasing transaction detail. That's for you to use to be able to pull a transactional report on every purchasing transaction you've done. You can filter that to limit it to a funding source, to a line item, to a transaction type, to a certain purchasing transaction state. It's really up to you. And you can use the report center, type in purchasing transaction detail, find the report, and say, give me a list of all of my purchase orders that are pending. And that report's going to do that for you. All right, thank you, Paulette. And that's I'm on screen here. You go to purchasing, you can go to purchase order, and then purchase order. Change your views, and there's the fiscal year open POs. And just like the earlier example I gave when I went to view transactions, this would be limited to just purchase orders. It wouldn't have contract service POs. And whatever you have access to is what's going to be listed. So it's a good thing to be doing, especially regularly if you have a lot of activity, so you can manage those encumbrances and the other things happening for your program. Using purchasing transaction detail report, especially if you have a lot of different funding sources, that allows you to actually filter your transactions by funding source. Here, you can't do that. It's just limited to like the top half of your information. And so, purchasing transaction detail. So, if we go to the report center, start typing to limit the amount of information being shown. So I have all reports underlined. All applications is selected. Now I'm starting to type purchasing transaction detail. Occasionally I'll get a call, someone can't find a report, and it's usually one of these two items are specified to something, especially into favorites. But I have it all reports, all applications. I have the little gold star by it so I can find it up here on my favorites if I wanted to avoid report center. But when I go to purchasing transaction detail, very similar to our general ledger reports, very similar to the dimension balance report, this is how we order up the report. It defaults to the fiscal year through the current date that we're on. So right now it's at today. So just keep in reminder for accruing our expenses here. The tribe adheres to generally accepted accounting principles, and those are set by GASB. And so on page 8 of the tribe's accounting manual, expenditures are recognized when services are performed or goods are received. So if it's now the month of October and we're paying for fuel that we purchased in September, your request to pay should be dated for September. Same thing with the revenues that we earn. That's going to be posted to the period they have actually been earned. So like solid waste is going to bill us in September for services. They don't wait until you pay them to recognize the revenue. That gets recognized in September. And so just remember, once the calendar switches here at the end of the month, we're in a new fiscal year, that any of these bills from fiscal year 24, we're using the 9/30 date on our general ledger posting date, or GL posting date, I think is what it says on the transaction. All right, so back to the slides. In which period are the goods or services consumed? So just keep in mind that if we're just trying to encumber funds on September 30th for the sake of creating encumbrances, if we don't actually acquire those funds or get those services in the month of September, that's not a fiscal year 24 expense. That's a fiscal year 25. So we're keeping the books open till November 15th. So if we're opening encumbrances starting in on 9/30, it should be for things we're getting on 9/30 for service that happened in the month of September. not later in the year, not later in October or November. So as our request to pay to come in, monitors, Lynette, program users should be reviewing those things to make sure that the receipt dates match the period of time we're trying to accrue the expense to. So just, as we get to the end of the year and then we get to the November 15th date, don't rush things through. That's what ends up creating mistakes. And for the program monitors, if we have a purchase that or a payment that goes through in fiscal year 25, but it needs to be dated to 9/30 and nobody catches that and it posts, that's 4 different journal entries they have to do to make a correction for the one item. So let's make sure as we're doing that, don't rush. Basically, look at that date, make sure the receipts we're using match the fiscal year that we're trying to accrue the expenses to. And otherwise, we might get delayed reports. Our items won't be correct. They won't be accurate. If we don't realize that that's an issue until after the monitors do their 425s for federal awards, now they have to file a correction. And that can impact the tribe's reliability or how the government views the tribe's record keeping. So make sure we're using those purchasing views as Paulette has pointed out. Look at our encumbrances, check our dates, and make sure to use the proper fiscal year. That's the last slide for this. The link's in the chat box, but there's a good handful of us in here too, so I'll make sure I email all of you a link to that slide and then the deal to GASB 103 that's going to make a change for us on how we budget each year. Are there any other questions for the chat box or for anyone else? Well, if we have no other questions, we can get to our day. Thank you all for attending, and I'll be emailing you this stuff here once the recording's available. So it usually takes me another day or so to get the recording done. Thank you all. Have a good day.